The risk of failing banks in the American economy is a topic that I want to discuss with you today because it concerns all of us. Banks play a significant role in our economy by offering services including lending, financing, and investing. Our financial system depends on them, but when they falter, there may be dire repercussions. The effects of failing banks on the U.S. economy is best illustrated by the financial crisis of 2008. Don't know if you recall, but major banks like Lehman Brothers and Bear Stearns failing set off a domino effect that resulted in a severe recession, massive job losses, and a sharp decline in the stock market. Now, while the government had to intervene with significant bailouts to stop the collapse of the whole financial system, millions of people lost their homes, their jobs, and their savings. Are we about to go through this again? Stay tuned for today's episode of Money Talk Sundays. Welcome to Money Talk Sundays. I'm your host, Stevie B. If you tune in on your favorite streaming platform, whether it's YouTube, Anchor, Spotify, just go ahead and hit that subscribe button, hit the like, share, and subscribe. If you're on YouTube, also hit that notification bell so you can get notification when we drop a new video. Again, like, share, and subscribe. Like, share, and subscribe. Like, share, and subscribe. Now, today's topic is more of a somber one based on what's been going on over the past week, including today. We have some news, so stay tuned. Listen to the whole thing to find out what happened today, Sunday, March 12th, 2023. We're going to find out a lot today. Now, speaking of banks and bank failure, a bank failure may set off a chain reaction that quickly spreads throughout the economy. A liquidity crisis brought on by failing banks may result in a credit crunch and a reduction in the quantity of credit accessible to both individuals and companies. This can result in a sizable drop in consumer spending, which can have an effect on overall economic growth, which is what the Fed actually wants. If you paid attention this week, the Fed chair, Jerome Powell, said, we need to take money out the market. And the way to take money out of the economy is we need to raise interest rates. So we're talking about another interest rate hike higher than what they perceived they were going to do previously because of the latest job report. People are working. The economy is so-called strong. The so-called lowest unemployment rate in however long. That's a story for another time because that unemployment rate is complete hogwash, it's complete bullshit. But I digress. That's a topic for another day. But what they're saying is we need to raise interest rates, take money out of the market. 2 million people are going to lose their jobs, and the government cannot provide money to them to help them stabilize their situation. Why? Because the point of this interest rate hike is to take money out of the market. There's too much money in the market because of the pandemic and the pandemic relief funds and so on and so forth, all these programs that they did, which caused inflation. But I digress. Again, we're going to keep moving. Like I said, as a subject for another time. So, now as you may already be aware, Silicon Valley Bank has announced its closure, which has had a significant impact on the stock market and the world of cryptocurrency. The Silicon Valley Bank, which was founded in 1983 to offer financial services to the technology sector, which has fueled the expansion of the world economy. The financial markets have been rocked by the bank's announcement that it is closing. It is no secret that Silicon Valley was instrumental in the development of the technology industry, and many of these businesses have benefited from the bank's services. The stock market is one of the areas where the closure has had the most profound impact. Several of the top technology companies in the world have relied on the financial services provided by Silicon Valley Bank. The technology sector is a crucial part of the stock market, although it is floundering. It has been floundering over the last 8 months, going to a year almost. Many of these businesses could experience financial difficulties as a result of the bank's liquidation, which would cause their stock prices to fall. Now, the world of cryptocurrency has also been impacted by SVB, Silicon Valley Bank's demise. The bank's liquidation has left a hole that will be difficult to fill because it was one of the main financial partners for several of the top crypto exchanges. As a result, crypto traders might have trouble getting access to the banking services they need to purchase and sell cryptocurrency. Silicon Valley Bank has been a key banking partner for Ripple for several years, facilitating its cross-border payment solutions for customers around the world. Ripple has used SVB services to hold and transfer funds in various currencies, including the US dollar, euro, and British pounds. Silicon Valley Bank has also been instrumental in helping Ripple navigate the complex regulatory landscape for digital currencies and blockchain technology. Now, with Silicon Valley Bank closing down, this will have a negative impact on Ripple's ability to conduct its business. Ripple will need to quickly find alternative banking partners to provide the same level of service that Silicon Valley Bank has offered. However, this may not be so easy. It will be a tall task. It's not as easy as it sounds, as not all banks are comfortable with dealing with digital currencies and the associated regulatory risks, especially when it comes to Ripple, because Ripple is right now engaged in a lawsuit with the SEC. In fact, during the past few years, Ripple has had to cope with legal and regulatory challenges, accusing Ripple of selling unregistered securities in the form of its XRP crypto. The SEC launched a complaint against the company back in December of 2020. In the midst of the legal battle, Ripple has refuted the accusations. Now, regardless of whether SVB is operational or not, the outcome of this litigation will have a tremendous impact on Ripple and XRP's future. Now, Ripple may suffer some severe difficulties because of Silicon Valley Bank's closure, but the business has proven resilient in the face of legal and regulatory difficulties. In addition to extending its services beyond cross-border payments and into the field of DeFi, decentralized finance, Ripple has been actively looking for additional banking partners. Although it is unclear how Ripple will continue to manage the rapidly evolving blockchain and cryptocurrency market, it is obvious that the business is dedicated to fostering innovation in this field. Now, it's not only just Silicon Valley Bank that has been affected this week. 2 more banks, in fact, one today, like I said, I'm about to get into this. 2 more banks has also announced that they would be shuttering operations. Signature Bank, and then today, Silvergate. Now, this just in. In order to stem the bank run, though, the Federal Reserve has decided to step in and assure that all depositors would be able to recoup their funds. We know that accounts are FDIC insured up to $250,000, but the Fed has stated that anyone who had money in Silicon Valley Bank will get 100% of their money back. But if you're a shareholder, you are out of luck. Now, the same goes for Signature Bank and more than likely Silvergate as well. They haven't officially come out and said Silvergate, but it did say Silicon Valley Bank. They did say Signature Bank. So we'll be safe to assume that this offer will also extend to depositors in Silvergate. Now, crypto-friendly lender Silvergate Capital is crumbling, and that is definitely not good for the crypto industry. After announcing plans to wind down operations and voluntarily liquidate Silvergate, the bank with connections to SBF, Sam Bankman-Fried, Mr. FTX, that bank, Silvergate, has become the latest casualty of the ongoing market collapse. Now, prior to that, the 35-year-old company from San Diego, California, which reported $1 billion in losses in the fourth quarter, stated about 2 weeks ago that it was forced to evaluate its ability to continue as a growing concern, which caused an exodus of its institutional clients, including Coinbase and Galaxy Digital. The crypto payment network Silvergate Exchange Network, which was launched in 2018 to facilitate rapid, round-the-clock transactions between market players and crypto exchanges, was later announced to be discontinued by Silvergate, one of its key growth drivers. After the collapse of FTX and its sister trading firm Alameda Research back in November, which both reportedly had accounts at Silvergate, which was once a $200 stock. Silvergate was a $200 stock late in 2021. That same year that Bitcoin reached an all-time high, it is now today less than $3. Silvergate witnessed its customers rushing to withdraw money out of the bank. It was reported last month that the Department of Justice had begun looking into Silvergate's connections, the Bankman Crypto Freeze enterprise. A freaking bank run sent everything crashing down. Now, also what you need to know is that Signature Bank, remember we said those two banks, Silvergate was one, Signature Bank. Signature Bank is now being taken over by the New York Department of Financial Services. New York State DFAS has taken possession of Signature Bank to protect depositors. Superintendent Adrian Harris said today, all depositors of the institution will be made whole, federal banking regulators said. The FDIC was appointed receiver of the bank. Signature Bank is a New York State chartered commercial bank and is FDIC insured with total assets of up to $110.4 billion and total deposits of $88.6 billion as of December 31st, 2022. Signature Bank is the second bank to be taken over by the FDIC in this past week. The FDIC closed down Silicon Valley Bank, owned by Silicon Valley Bank Financial, on Friday after customers clamored to withdraw deposits. Signature Bank stock fell 32% in the last two sessions of the week as investors worried that Silicon Valley Bank turmoil would spread to other banks. So the bank run is on, but what the Fed is trying to do is stop the bank run, trying to let people know, hey, your money is safe. You will be able to withdraw your funds. Don't freak the fuck out and collapse the whole fucking economy. What is your take on this, ladies and gentlemen? Where do you see this going? I'm seeing a lot of chatter online right now. Things is going haywire, but what's your opinion? Drop it in the comment section. Let me know. Let's see how this week goes, because tomorrow's going to be very interesting to see how shit plays out. Anyway, I'm your host, Stevie B. Thank you for tuning in to Money Talk Sundays. Happy trading.